Hey guys, Louie here, and today I'm going to talk about the three stages of silver stacking. Yeah, I think if you've been in this for a while, you probably already know this, but I'm going to give you my thoughts on the three phases that a silver stacker goes through over the career of his stacking journey. Let's get going and do number one. Okay, we're going to start off with why do you stack? Now, a lot of people before they start stacking they read articles, right? Economic collapse, debt ceiling expanded, the dollar depreciating, etc. Maybe there is a political event that's about to happen, new leadership, and smart people tend to be pessimistic about some of the moves that our government is making, and actually all around the world, and they get a thought that they want to protect the value of their assets. The stock market is one way to go and has been lucrative so far, but it doesn't always stay that way, and then there can be periods where it is just in the doldrums for years and years, or actually crashes, and people potentially lose half their money if they sell. So there are many reasons to stack, but I guess you could say concern about the economy is probably the first one, and concern about the value of the dollar. And of course, a lot of people have all their money in dollars, all right? Now, if you've got some of that in real estate, or classic cars or musical instruments or whatnot, you're particularly protected with tangible assets. But people, the average person, has money in the bank, they have some stocks in their portfolio, and they have some assets, right? But it's the money in the bank and the value of the dollar they're concerned about. So then somehow they find channels that show them the pleasures of silver stacking, and also gold, but I'm just going to talk about silver for right now. Now, many people, when they first start out, they actually just buy gold. That is a very natural thing, okay? When you think about protecting your money, the value of the dollar, gold is what most people start with, and that's a good place to go. Okay, I did as well. That's how I started. But then eventually, as you start seeing more information, you realize that silver is also an opportunity. And you start buying. Okay, let's just say that you've decided that you're going to put money into silver, and the very first thing you want to do is make a big purchase, right? And what you purchase is, well, there are many options, but this would be a mistake. But plunking down a large amount of money on silver or gold before you really know the market, before you really know the trends, before you really know what to buy and what to pay for it. Okay, so that is, you may jump out and say, I want generic rounds. You may say, I want generic bars with the lowest possible premium. And many people start that way, and that is a good way to start. Other people think, well, you know what? There is a value to sovereign coins. So maybe I should consider any sovereign coin. World coins are cheaper than American coins, and they may buy some kangaroos or some maples. And then again, there are people that think a little bit more, and they think, well, down the road, I'll be selling this, and what would be easiest to sell? And these green cap tubes, those are American Silver Eagles, and that is the penultimate stacker coin. But then again, if you're paying too high a premium, you're probably making a mistake with that, right? So you jump in and you buy one of those things usually. Bars, perhaps 1 ounce rounds, American Silver Eagles, or maybe foreign silver, and you start building your stack. But you do it a little too fast, okay? Most of us do it a little too fast, and we're not getting the best deal. That's what my website's all about, trying to get you the best deal every day. Because you make money when you buy, not necessarily when you sell. A lot of people lose money in silver, right? I mean, when you see a silver chart, the thing you don't realize when you first start out in the first phase is where are you on the chart? Now, when I started out in 2014. And I bought gold in 1984, but I'm not going to cover that. When I really started stacking earnestly, I was very considered about the debt monetization, and I knew that that was going to debase the currency, and I thought that was going to raise interest rates. Turned out it didn't. I was wrong about that. But where you start on this chart of silver over the last 10 years actually matters. And when prices were coming down off a $50 high, well, I started jumping in right around here, 20 to 22. And then we had a couple of little false rallies, but we very soon made it to 18, 17, 15, 14. And that was a difficult period. And in phase one, many new stackers, if they're hitting the downtrend, they sell and they lose money and they salt the earth and they say they're never coming back. But when you're in a sideways market, well, you're just accumulating. But the payoff is down the road. So this is for the patient stacker, right? This is for the person that is just picking up weight, or eagles, or coins, or constitutional junk, and they're just digging in. And what separates the men from the boys here is that you have to have a long-term picture. You cannot have a one-year picture, a two-year picture. You gotta stretch your mind a little bit to what may happen in the long run and believe in what you're doing. And that's what the people that were stacking between 2015 and 2019 were doing. It was a long, dry period, and I know a lot of people that bought in and then sold out. And of course, there's a cost to buying and selling. There is the premium when you buy, and sometimes there is even a loss below spot when you sell, depending on what you bought. Now, that's the other thing you don't know is if you buy silver rounds and silver bars, you're gonna take a haircut when you sell. When you buy eagles, that's not always the case, and even some other foreign sovereign silver. But the people that stacked in this period really got rewarded in the long run. Okay, I want you to have a 10-year perspective on anything you do. And many people are saying the move has happened. Why should I start stacking now? Well, you have to pay to play, right? And if you think silver is going back down, then you'd wait. But if you think silver is getting more valuable, of course you'd continue buying and you'd buy the dips. All right, but phase one, we are putting silver and gold away in all different forms. And the biggest mistake is buying too much at once. The biggest mistake is not learning how to buy. And another possible mistake is learning what to buy. Did you know that there are different tax reporting rules depending on what you have bought? That's when you go to the local coin shop and you plunk it down, and you don't really want to generate tax reporting forms. That can be a headache in and of itself. So you have to understand that. But when you're just getting in, you probably aren't that deep into it. Okay, but that is phase one, accumulation. All right, phase two is watching the charts. And now you're getting a little deeper. Actually, many silver stackers and gold stackers become armchair economists, because when you're thinking about the economic collapse, and when it's going to happen, and when the reset, you hear that a lot, the reset where they change the monetary system, whether it be back to gold, or whether it be to crypto, or whether it be a Venezuelan type, just add zeros to the currency. But you start watching the markets, you start watching the economy, and honestly, the more you do that, the more concerned you get about the collapse. All right, so this is also a frustrating period when you're watching the economy, and you're learning about the 10-year bond, and you're learning about the dollar and how it's compared to a basket of currencies. And people talk about king dollar and how the dollar is the strongest currency in the world, which it is. But then you also see other articles that say, it's lost 98% of its value over the last 100 years, and you realize that is true, especially if you're a little bit older. But you learn more and more about the economy. You start following some of the economic indicators. You start following pundits on YouTube or somewhere else. Maybe you talk to your financial advisor if you have one, or your stockbroker, or the person that advises you about your 401k. And at that point, they'll say, we don't recommend precious metals because their historical returns are not good. Well, the historical returns on gold and silver really depend on when you buy and when you sell. And then you may start to realize that that is true. There are times when the returns on gold or silver are not good. There are times when the returns are negative, and there are times when the returns are positive in an exponentially fantastic fashion. All right, so when you buy and when you sell actually matter, and you start watching the charts for signals of when to buy and when to sell, because you may be putting your stack away for the long term. You may want to bequeath that to your family or friends. But this is the point where you start thinking, well, there is a time to buy. As we said, when you're getting good deals, when premiums are low and silver is flat, people have lost interest, right? And there is also a time to sell when spot is higher, when premiums are higher, or much higher when there's something exogenous like a silver squeeze, which provided a selling opportunity to people that had been stacking in here around $14, $15. Many people who bought their silver eagles for $1 or $2 over spot, and I'm talking $16 eagles, well, they were able to sell them for close to 40 when FOMO hit the market. All right, so in phase two, you watch FOMO as well. Now, if you're like most people, you probably sit it out and say, I'm just going to wait. This could be the rocket to the moon that I've been waiting for. But you know what? It never is. It never is the rocket to the moon. It is a slow and steady game, and sometimes a slow and steady game, and sometimes there are opportunities to change your stack, reduce your stack, and buy something you want. And sometimes you can just sell with higher spot price and higher premiums, and you walk away with much greater returns than somebody that had their money somewhere else. So there is value to learning when to sell. Now, I would never sell all my silver, and I would never sell all my gold, because if we head into a Venezuelan, type economic event where the currency really, really starts to take a hit, which is very, very possible, but your timing on that is impossible to predict, because our government is very good at kicking the can down the road, and the average American is not concerned about the value of the dollar. And although they may be angry about inflation, they actually don't dig any deeper, and they just accept it, and they keep their money in dollars. You have to be above average to be stacking. You have to have thoughts that the average person doesn't have. But in phase two, I think you start to learn that there is a time to buy, and there is a time to sell some or maybe half of your stack, depending on how big your stack is. If you're putting away 2, 3, 4, 5, 10,000 ounces of silver, I suggest you consider rotating your metals when the time is right. And then we move into the third phase. The third phase is selling. how to sell your silver, where to sell your silver. Well, I hope over this time, over this 10-year period, you've been going to your local coin shop. You've been exploring what their buyback prices are. You have found advice from various places on where the best place to sell is. You've looked at the online dealers, the big ones like the JM Bullion, the SD Bullion, etc., and see what they're paying, because that's a very easy way to sell. So there are easy way to sell, there are easy ways to sell, and there are harder ways to sell. And sometimes it's worth exploring those. The reason you've gone to your LCS is you've built a relationship with a good LCS, not a pawn shop. Not one in an area that is so remote that it's basically a buyer's market. They can pick your silver off for whatever it is they want, because there's no competition. You want to look at your local coin shops, see what their buyback prices are. You want to look online to see what the big retailers pay, and they offer you insured shipping labels, something to consider. And you want to, you may want to look at social media, but there's a lot of danger in social media in giving up your personal information. So I don't sell on social media. I sell through eBay. And you may want to pick up an eBay store, which is not that hard to do, but then there are tax reporting implications. So eBay is a mixed bag. You'll get the most for your silver and gold on eBay, but you will also pay fees and you will have tax reporting. But you're thinking about how to sell. You're thinking about what to sell in the third phase. Do you have sterling silver, right? When spot price is up, it may be time to get rid of that sterling silver set, right? The premiums won't be high, but high spot price gives you an opportunity to move out of the less desirable things. What are less desirable? Well, less desirable would be sterling silver. Less desirable would be something less than 90% silver. Let's say war nickels or 40% Kennedys, or foreign silver. Okay, foreign silver is pretty hard to sell, and you'll take a good haircut when you sell foreign silver with all of its odd weights, depending on what country you're in. Of course, if you're in Canada, Canadian junk is the thing to stack. If you're in America, you really want American junk, okay? It's just going to work out better when the premiums come. But you got to figure out what to sell. Now, you may also have been picking up some numismatics, and that tends to run counter trend to spot price. When spot price is rising, people want to have and buy generic silver, 1 ounce, rounds, bars, 10-ounce kilos, 100-ounce bars, and they tend to want sovereign silver coins. Where'd they go? I can't find them. Looking for those maples and eagles. Let's see. Yeah, they want sovereign silver coins. So you're going to see a high demand for generic silver, sovereign silver coins, silver eagles, etc., and a lower premium for stuff like sterling and, like I said, war nickels and so forth. You really don't want to buy 40% silver junk. I recommend you avoid it unless you're getting it at the bank, in coin roll hunting. But you will see that there's a difference in the market, and numismatics. Where did my peace dollar go? Numismatics have their own cycle. They tend to run more with inflation, and they can appreciate when spot price is actually dropping. That can happen. I lost my say. There we go, the Morgans. Now, you may have in phase two, you may have also diversified silver, gold, numismatics, and some collector coins. Now, in phase two, I'm going to go back for a minute. In phase two, you probably got pretty excited. Let me just go back here. You probably got pretty excited about some interesting new coins, right? Let's get away from sovereign currency. Let's get into collector coins here. Let's see, what is this one? Rare coins. Okay. Uh, I don't know what those are. Let's find something else. Maybe you jumped into slabbed coins, um, or maybe you jumped into high premium, you know, um, something that is the hit of the day. Here is, what is this? That's a personalized silver bar. I'm trying to find something good for you guys. Let's see. High premium collector. Oh, here we go. Maybe you jumped into pandas, right? Okay, they're a little higher premium. Maybe you bought Queen's Beasts, foreign British silver, and started a collection. Maybe you did a collection of koalas in the slab. Maybe you got into first strike coins. But there's no slabbed coins in these pictures here. But maybe you got into slabbed coins and you started a registry set to prove you had the best date run of Silver Eagles in First Strike, MS-70 form, or anything like that. Something more exotic with a higher premium. Maybe you got into, Scottsdale Mint bars. They're a little higher premium, but basically you buy them for weight. And then, what you typically find out is that stuff does not retain its premium over time. All right. And then you also find out that when you pay a good deal over spot for something, that's a bad example, that Queen's Beast, but you pay, a higher price over spot for something, you get disappointed down the road when it gets impaired with a milk spot, or something like that reduces its value. Let's see what we can find here. But what you stack impacts what you sell and when. And, selling your silver and gold depends what you've got. If you've had numismatics that have doubled, like Carson City Morgans or something like that, you can put that on their own track. You don't need to watch the price of silver to know when to sell numismatics. Collector coins tend to be pump and dump. And if you buy them and they double in price, you probably ought to sell them. If you buy them and they go down half in price, you probably ought to sell them, right? If you're playing that market, if you're trying to flip, there are good flips and there are bad flips. And, sometimes you make out well and sometimes you don't. Okay, so that stuff is more of, well, it's a collector market and it comes and goes. Now, when spot price starts to rise and FOMO comes back in the market, then people just start buying everything. I just sold something on eBay. Not sure what it is. I love that sound. Yeah, but you're gonna sell, right? So what are the tricks to selling? I told you about the online dealers. It is safe and pretty secure with insured shipping. The LCS, you've got a relationship. You go in there and you buy a little something once a month. You let the guy get used to your face. You find the best LCS with the best buy prices, okay? Like, you can buy online cheaper generally than you can buy at the LCS. And I suggest you do that. You use all the resources to buy your silver and gold at the lowest price you can, but buy a little from your LCS to develop a relationship and find out what LCS pays the most, and then you've got a way out the door. You need to know your way out before you start buying. That could impact what you buy. Like if you have an eBay store and you want to buy collector coins and flip them, then you're okay with that. But if you're going to sell your collector coins to the LCS, then you're going to lose a lot of money, okay? Or exotic foreign coins, or rare gold, etc. So know where you're going to sell before you buy. Now, what are you going to do with the money you raise when spot is high and premiums are high, and you've got your permastack, which you're not selling, but you traded out, let's say, half of your stack, silver or gold, at whatever time you think is appropriate? What are you going to buy? Are you just going to keep it in dollars? No, probably not. You're probably going to buy something like property, all right? And this works well when This can happen, and it's the perfect storm. The perfect storm is you buy your silver and gold when the market's depressed and premiums are low. You sell your silver and gold when spot is high and rising. Okay, not high and falling, high and rising. Um, and when premiums are high to the best source, and then you trade that money into something else. Now, it depends on the economic cycle and whether housing, property prices are crashing at the time. All right, because then you're going to want to pick up property, right? Property is what most people go to. Property is what has built wealth for some of the richest families in the world over time, and property is a good choice. All right. Another choice, depending on the markets, like you don't want to trade out of your silver and gold at a high price and buy into property at a high price. You can and you might, but I would rather wait for the ultimate, the hat trick here is buy at a good time, sell at a good time, and buy back into real assets when they're depressed. Now, that's also a timing game. People say you can't time things. I call BS on that. I know people that have done it, and they are some of the people I respect the absolute most. The people that got into silver at 10 bucks, sold silver at 40, 50 bucks, bought property on the cheap, and then down the road they were much, much better off. That has happened in the past. And people that sold the silver squeeze, not bought the silver squeeze, right? Those people, a lot of them got disappointed and sold their stacks at a loss. But people that sold the silver squeeze, and then they're waiting for an opportunity to get into property when the market is depressed or into the stock market, right? Okay. So here's the Dow Jones, and generally it's gone up over time, and I think we're heading for a crash, but I've been very wrong about that. So the thing to do with your money when you sell your metals is hope you get into a point. Now I think 2008, 2009, 2010, I think metals were rallying. Let's see if we can check that out. Where's the chart? Uh, they say max, and they don't give you long-term silver chart. Let's go back to 2008, 2009. Do you have a minute to look at this with me? We'll try AppMex. All right, let's get into a all years. What's it going to go back to? Oh, not that far. Okay, and how does this work? All right, well, you're going to have to trust me here. All right, so what was happening? Yeah, we had a run to $20 silver in 2008. The big run in silver up to 50 bucks was not until 2010 to 2011 really. So what was going on in 2011? Okay. Yeah, we had a stock market crash, right? Right after, let's see, 2011. It was just recovering right then. So that would not have been a terrible time to take that $50 silver, maybe it was $40, and convert it into the Dow Jones, the S&P, the Nasdaq. So now you have traded out of something on a high and into something on the low. And that's what I'm waiting to do. Of course, I'm in retirement, and my 401k is in bonds and CDs. That I don't want any part of the stock market right here. And silver price and gold price is appreciating rapidly. There are two things I'm doing here. The first thing is I'm waiting for an opportunity to sell some of my silver and gold at these high prices and higher, and I think it is going higher, and waiting for the adjustment in the stock market. And we could easily break this low here from 2020. And I don't think we'll go back to 2010, but it's very possible that we'll have a 30, 40, 50% retracement in the stock market. It always happens. Why would it not happen this time? Unless the government starts buying stocks and bonds, in abandon. And the government can do lots of things that'll screw up your plan. But you want to sell out of your metals at a high. some of them, not all of them, and you want to buy into another asset. Now, stocks are actually a tangible asset because you're buying ownership in companies which are tangible things and make revenue. Okay, but you could look at real estate trusts, you could look at fine art. You could look at many different kinds of tangible assets. Collector cars, people that bought collector cars in the crash and held them, did okay. People that bought them during the FOMO phase and held them lost a lot of money. So you have to look at the tangible asset that you like, all right, that you follow and that you understand. But that is the selling game, is trading out into something tangible when the time comes. Now let's talk about timing. And this is anybody's game, okay? Let's see if I can get over here. All right, here we are at 30, what do they call that? 31.25. Is that where we're at right now on silver? And as you can see, silver has made a remarkable run. Silver runs faster than gold sometimes. Gold appreciates, silver follows, and then silver exceeds the appreciation of gold. That is just what happens on the upside and the downside. During the pandemic, silver went down to $12. Yeah, you couldn't buy it for that. Nobody was selling silver for $12 or $15 or probably even $17. You had to be quick like a bunny to capture silver in that low range because it didn't stay there long. But you have to realize that silver can spike. During this period here where silver went from 14 to 50, did it go to 50? Oh, this shows 43, so that's probably a closing week or a closing month. I think that's probably a closing week price. But when silver is running, you have to realize there is a time to sell because it will fall back and it will fall back hard. But it usually doesn't fall back to old lows. It didn't go back to $7. It didn't go back to $10. It went back to what? It went back to $15. All right, now silver is running again. So here we have it, but look at the run in 2008. And honestly, the economy and the dollar and the government and the deficits and the leadership is far worse. No matter who you vote for, the economic leadership, the people that run the economy, whether they're presidents or Federal Reserve or central banks or just the bankers that actually run everything, that control our government and control us, what was I going to say? I forgot what I was going to say. Anyway, there is a time to sell. There is a time to sell with silver and gold because you have these runs and they can be dramatic. So I guess I was going to say the run from 14 to 50 is a triple, and here we can call this the run from 20 to 31. Well, that's only 50%. So 50% versus 300%. That's your zone. Do I think silver is going to $100? Well, let's see, 300% on 30 would put you to 90, 80 or 90. Okay, that could happen, but I would say, look for 100% or 200% and be happy. And there's going to be a lot of action here around 40, 40, 45, 42, $45. 33, we're going to bust through 33. I can just smell it. You can also look at platinum and palladium and other metals. Platinum will run as well when gold and silver run. You may disagree with that, but that's what I think. But I think if you sell now, if you think the run is over, I don't think so. Based on the years I've been doing this and based on the economic scenario, I don't think that the run is over. I think we're going to keep bumping at 3250, just like we kept bumping at 30, just like gold kept bumping up to 2000 and then busted through, and now we're 26, 2700, and gold could easily go to 3000. But I think silver is the play because I think gold is going to have a toppier resistance because it doesn't have the history of silver and it doesn't have these spikes. And the speculators will be in this, the hedge funds will be in this, and the futures market people will be in this. When it busts over 3250, you're not going to see selling, you're going to see buying. okay? And then it's got clear sailing. I mean, what? Look at that. See any resistance above here? You see any resistance above 3250 right here? Okay, that is over 10 years ago, but that we held that mark for just a short period of time. Um, plus we've got inflation. I mean, you know that the inflated price of silver in today's dollars versus, this number 10 years ago, tack inflation onto that, and in real terms, silver should easily run to 60 or so. But in nominal terms, just looking at the chart, I don't think it's going to have any trouble getting through 33. And then it's going to be a run to 40, and then who knows? And also, when you look at, what was I going to say? Uh, well, just considering what is going on with commodities. Okay, let's take a look at copper prices. And I talk about this every day in my daily videos. Subscribe if you'd like to see more of those. And join the channel if you want to get into the inner circle and get some additional perks. But here's a copper price. Okay, let's see if we can get a max copper price. Okay, you see commodities basing and moving up, and you'll see similar charts in nickel. I highly recommend nickel. Buying nickels from the bank, and copper, buying nickels from the bank, they have copper in them, and aluminum, and steel, and probably wood at some point as well, unless the economy totally collapses. But you see, commodities are running right now because there's a fear of inflation, and because China is stimulating, and India is on a tear, and everything we consume, and all of our electric grids, and what things that we build, and supercomputers, they're using silver, they're using copper, they're using nickel, they're using all of the industrial. I don't know what you call them. You call them industrial metals. They're not precious metals. But to me, they're precious because it takes labor, and it takes energy, it takes petroleum, it takes taxes, it takes government fees, it takes all those things to get silver, platinum, palladium, copper, aluminum, steel out of the ground. And you can bet that inflation is going to continue to attack commodities, and they're going to run higher. You may also know that silver is more commodity than it is precious metal. Yes, it was precious in 1795, and all the way up to when they took silver out of our coins in 1965, but it is also industrial, and both of these indicators say higher, higher, higher. All right, I'm going to kind of wrap it up there, and you can ask any questions and give any advice that you would like to give to your compatriots here. We are a community of people that are buying silver and gold, and sometimes platinum and palladium, and sometimes numismatics, and sometimes collector coins for fun or profit, and sometimes copper. This is the community that I have and want to build here, where we're looking out for each other, where we're trying to get the best prices when we buy. We're sharing tips and tricks. We're talking about selling things when we sell them. We're telling you what dealers, fall short, what dealers charge too much, what dealers are fair, reasonable, and usually lower prices. And then we're looking for ways to get stuff at really extreme bargains, whether it be on Costco or on eBay through reputable sellers. That's this community. So join it if you like. I look forward to seeing you in the future if you enjoyed this video. And you guys have a great weekend and enjoy your silver and gold. You're doing the right thing stacking this stuff, guys. Bye.